Feel for them with that mess. Well, lately it seems like no matter what you buy these days, the price has gone up.
New report from the Labor Department shows prices for U.S. consumers in June jumped the most in 13 years. Rob Stein is CEO of Astor Investment Management. He's joining us now with a deeper look at the reasons behind it. Can we just flat out say it's the pandemic?
We can, but we probably more accurate to say it's the response to the pandemic. A lot of money flooded the market, supply chain shut down, too much money chasing too few goods drives prices up.
So supply can't keep up with the demand, basically.
It can't, and also the amount of currency in circulation is also greater. So that too adds to elevated prices. But Micah, we're seeing it in energy, a little bit in food. We're not seeing it across the board as much as you would be concerned about. Obviously, things like lumber prices and raw materials are also elevated. But we're starting to see some flattening in like communication products, cell phones, et cetera. But I don't think this is transitory. I don't think this is temporary. I think we are on a path to higher inflation for a perceivable long period of time.
Well, that sort of does counter what the White House and the Fed both indicate, that this will be a temporary, I don't know if that's the same thing as short-lived here, but what is the evidence that you're seeing that suggests the opposite, the way that you feel about it?
Right. So without getting overly technical, I have read the Fed. I am very familiar with how and many other economists are looking at it. But the amount of money in the banking system, trillions of dollars, the highest it's ever been, is going to start to circulate through the economy. They're not going to be able to suck it back out. And as that starts to circulate through the economy, it's not going to be easy to contain very quickly. So you're going to see money growth. Wages are starting to go up. And that's going to accelerate and exacerbate a problem that's not going to be gotten under control in the next several quarters.
While it accelerates, though, and you say wages are going up, will things even out at some point? Will we just get to a next height as far as cost of living is concerned?
Well, yeah, certainly supply and demand will meet and cost will moderate. Ray, Micah, the cure for high prices is actually high prices. So as energy prices get to a level where you start consuming less of it and other goods, prices start to come in a little bit. So I do believe that is ultimately what happens, and possibly we have another decline or deflationary event, but I believe that's several years off. I don't think this is something that resolves itself by the end of 21 or even by the end of 22.
So the option for the Fed here is to raise interest rates sooner than later. That would help with inflation, but the concern is that it would weaken the recovery here. What is your view?
Exactly. Sure. It's a two-edged sword, and having rates go up will attract capital to the bond market, but it'll take it out of the stock market. At the very low rates right now, nobody's going to lend to the government. So they're going to have to raise rates, or they're going to go up naturally in order to get some of that capital that's flying into these highfalutin stocks to go into fixed income, to bonds. You're going to get higher rates there as well. So the way I see it is there's a lot of conditions: higher wages, higher interest rates, floating more bonds to support the debt, all conclude higher rates, higher inflation for a little bit more than what I would call transitory period of time.
Yeah, I mean, we're talking used cars and trucks, they're going up 10.5%. We're talking about restaurant prices going up. We're talking about gas going up. It's scary to think that. And
it is.
Also,
it's double-digit increases, and quite frankly, I can draw a scenario where we start to have shortages of things by the end of the year. Now, I'm not talking about war-torn countries where the shelves in the supermarkets are empty, but I do believe you might be looking for a particular type of cereal or a particular type of food product, and it's not there. Certain types of lumber, you're going to have to supplement or complement it with other types. I would say prepare not only for higher prices ahead, but also prepare for certain shortages in things. Now, I'm not trying to state things over pessimistically or scare people, because I do think that we're going to have a very nice economic growth period, but just with some higher inflation. So I don't see this as the beginning of the end, not for a long shot.
Well, that's good to hear. Rob Stein, CEO of Astor Investment Management. Be safe, be well.
Thanks, guys.
Take care. Coming up, the best from the